Let's see this segment number 1. So let's start with simple things first. And segment number 1 is about basic concepts of GST. You will not get one question also from this, but for MCQ purpose it may be tested, but otherwise for question and answer wise it will not be tested. And you all know how indirect taxes has been formed. So how indirect tax is formed? All various indirect taxes levied in the past by central government got subsumed into GST. What were the old indirect taxes levied by central government in the past? Excise duty, service tax, value added tax, customs duty. But value added tax not levied by central government, value added tax levied by state government. And 4 indirect taxes levied by central government got subsumed into GST, that is excise duty, service tax, central sales tax, that got subsumed. But what about the customs duty? Customs duty not got subsumed into GST. So why? Because customs is outside the ambit of GST, and customs has some additional customs duties. What were the additional customs duties? CVD and SAD. CVD is to counterbalance excise duty on imported articles. SAD is to counterbalance sales tax on imported articles. For example, when you are purchasing an article in India, so on that article in the past, that is before 1/7/2017. Why 1/7/2017? Because GST is implemented with effect from 1/7/2017. So before 1/7/2017, there used to be excise duty on a product which was manufactured in India. Same product, when you are importing from outside India, there won't be any excise duty. To counterbalance that only, they have levied something called as countervailing duty. Same way, when you are purchasing a product before 1/7/2017, there used to be sales tax, and to counterbalance that sales tax on the imported article, they have levied something called as SAD, that is special additional duty. Whether excise duty got subsumed into GST? Yes. So whether sales tax got subsumed into GST? Yes. So this CVD and SAD is to counterbalance excise duty and sales tax. So CVD and SAD also got subsumed into GST. So that is the first point. All indirect taxes levied by central government in the past, except customs duty, but including CVD and SAD got subsumed into GST. And next, indirect taxes levied by state government in the past. Not all indirect taxes levied by state government. This will be tested in MCQ. Already they have tested this. That is, what are the indirect taxes that will be levied by state government which got subsumed into GST? Only 6. Only 6. What are those? Value added tax. Value added tax levied on intra-state sale. Advertisement tax levied on advertisements, hoardings. So big hoardings and all we will be putting na. So when I walked in this street and all, lot of big hoardings I have seen. So to keep that hoarding, so we need to pay some amount. So that used to be advertisement tax in the past to the state government. Then luxury tax on hotel accommodations, entertainment tax on cinema actors, cinema theaters, etc. Lottery and betting tax on lottery tickets, purchase tax also known as octroi. So these are the 6 indirect taxes levied by state government in the past that got subsumed into GST. So other than this, what are the other indirect taxes not got subsumed into GST, but even today it is levied by the state government? There is something called as Kerala flood cess, so which is levied by the state government of Kerala, subsumed into GST, not subsumed into GST. And there is something called as professional tax, which will be levied by many state governments, not subsumed into GST. Then in Maharashtra, there is something called as local body tax, not got subsumed into GST. Then corporation tax, municipal tax, corporation tax, etc. that also not got subsumed into GST because they are levied by the local authorities. So tax levied by local authorities not got subsumed into GST. So we get a MCQ. Which of the following not got subsumed into GST? A will be CVD. B, service tax. C, municipal taxes. D, none of this. So what will be the answer? C, municipal taxes. So because municipal taxes levied by local authority not got subsumed into GST, including the property tax that we pay na, property tax or even stamp duty, registration charges, there are many. Whenever state government want revenue, they will be levying it. That not got subsumed. Only 6 got subsumed into GST. So this list you need to remember: value added tax, advertisement tax, luxury tax, lottery and betting tax, entertainment tax, and purchase tax, also known as octroi. Then whether India is having single GST model or dual GST model. India is following dual GST model. Dual GST model means what? Both central government and state government will parallelly levy GST on the common tax base, that is known as dual GST model. And this dual GST model we have adopted from which countries? Brazil and Canada. So Canada, which is now in news for all bad reasons. So Brazil and Canada, from there only we have taken this dual GST model. And this dual GST model is based on constitution amendment. A constitution amendment was required for the purpose of bringing GST, and that constitution amendment happened in which year? Not 2017. The constitution amendment happened in 2016. So we will be thinking that it is 2017 and select the option as 2017. No, it is 2016. Constitution 101st Amendment Act 2016, and the GST is from 2017. Then, as GST is a dual GST model, so the decisions needs to be taken by both central government and state government. So therefore, there was a need of one common decision making body. What will be the name of that common decision making body? GST Council. So GST Council is a constitutional authority or a government authority? Constitutional authority. So it derives the powers from Article 279A of the Constitution, and the head of this GST Council is not President, is not Prime Minister. It is Union Finance Minister will be the head of this council. It is constituted by President of India, but Union Finance Minister is its chairman. And what is the role of this GST Council? They take decisions relating to various aspects. What are those aspects for which they take decisions? Rates of GST, and then procedures like return filing due dates, and even exemptions, whether a product or service needs to be brought into exemption or removed from exemption. These are the functions of GST Council. And how many members will be there in GST Council? Total 33 members. How 33 members? One Union Finance Minister. And how many states we have? 28 states plus 3 union territories with state legislature. What are the 3 union territories with state legislature? Delhi, Pondicherry, Jammu and Kashmir. So for these 3 union territories with state legislature also, SGST Act only will be applicable. So therefore 28 plus 3, 31. So state finance ministers will be there, and 1 union finance minister, 31 state finance ministers, plus for remaining 5 union territories. What are the remaining 5 union territories? Daman, Diu, Dadra, Nagar Haveli, Chandigarh, Ladakh, then Andaman, Nicobar, Lakshadweep. Okay, so these are the 5 union territories. For these 5 union territories together, we have 1 union MP. So that 1 union MP. So 31 plus 1 plus 1. So 33 members will be there in the GST Council. And what is the quorum to call it as a valid meeting? 50%, which means 33 into 50% is 16.5, that is 17 members should be there. And in this, central government vote will have 1/3 weight and state government vote will have 2/3 weight. And what should be the weighted majority to take any decision? There should be a 3/4 weighted majority. 3/4 means 75%. See, these are the key points that will be tested in MCQ. That's why my discussion is focusing on those points only. And so what you need to remember, total there will be 33 members and the quorum will be 50%, and central government vote will be having how much weight? 1/3 weight. State government vote will have 2/3 weight. And how much majority is required to take any decision? 3/4 weighted majority is required. And state finance ministers and MP of state affairs will be its members. And what are the types of GSTs that we have? Total 5 GSTs we have. CGST, full form of CGST, Central Goods and Services Tax, levied by central government on intrastate supply. What is an intrastate supply? There are 2 factors, location of supplier and the place of supply. If these 2 in the same state or same union territory, it is known as intrastate supply. If the location of supplier and place of supply is in 2 different states or 2 different union territories or a state and a union territory, then it will be known as interstate supply. So in case of interstate supply, there is only one GST. What is the GST? IGST. IGST levied by whom? Central government or state government or both? Central government. IGST levied by central government, fully retained by central government, or it will be shared with the state government? It will be shared with the state government. It will be shared with the state government. Is it the originating state or the consuming state? Consuming state. Say for example, if the transaction takes place from Karnataka to Kerala, so then originating state is Karnataka and Kerala is the consuming state. So IGST will be levied by central government and 50% will go to central government and remaining 50% will go to the consuming state. What is that consuming state in this example? Kerala. So therefore it will be given to Kerala. That is the example for this. Understood or not? But all other cases, all other taxes, that is intrastate supply, we have CGST, SGST. So CGST, SGST is the combination, but when CGST, SGST will come, if it is an intrastate supply within the state. If it is an intrastate supply within the union territory, what is the combination that we have? CGST and UTGST. CGST and UTGST. And then what is this compensation cess? As levy of GST results into loss of revenue to the state governments. So why there will be loss of revenue to the state governments? Just now we saw IGST 100% collected by central government, in that 50% given to the consuming state. So the originating state will be having the loss. So in order to compensate the loss on account of implementation of GST, so central government created this GST compensation cess. This compensation cess will be levied on notified goods or all goods. Notified goods, not on all goods, only on notified goods. And whether this will be levied in those states where there is loss of revenue on account of implementation of GST or across the country. Across the country, notified goods across the country, not in those states. For example, in Kerala, because of implementation of GST, there could be loss of indirect tax revenue to the Kerala government. Then in that case, not only in Kerala, but those notified goods transacted across the country, whether it is intrastate or interstate, GST compensation cess once levied, it will be applicable on all goods. Are you understanding this? Whether all goods in the sense like all notified goods, whether it will be intrastate or interstate. So whatever revenue that is collected in the form of GST compensation cess will be given only to those states where there is loss of revenue on account of implementation of GST. Loss of revenue means what? Decrease in the revenue. So to those states only they will be paying it. You got it? So who will be collecting GST compensation cess? CG or SG? Definitely CG. And it will be paid to those SGs where there is loss of revenue on account of implementation of GST. And this GST compensation cess can be levied up to which date? So initially it can be levied up to a period of 5 years from the date of implementation of GST. So what is the date of implementation of GST? 1/7/2017 plus 5 years over. So therefore they extended it for a further period. What is that extended period that you need to remember? 31st March 2026, please remember that. So it can be tested in MCQ. So compensation cess can be levied by central government up to 31st March 2026 and it is on notified goods, not all goods, and it will be paid to compensate the states on account of implementation of GST. Then this is the part which I discussed, IGST levied by central government and 50% of that is transferred to state based on place of supply. And if place of supply cannot be ascertained, so then what they will do, they will be giving it to the consuming states, okay. And intrastate supply, interstate supply, already we saw. Intrastate means what? What are the two factors? Location of supplier and place of supply. Same state or same union territory, intrastate. You need to remember this section number. Section 8 of IGST Act deals with the meaning of intrastate supply. Section 7 of IGST Act deals with the meaning of interstate supply. So don't worry, all section numbers along with this section deals with what I have given at the end of this book. So please see the end of this book. I have given the section index. I have given the section index, section number, and what is that it deals with. So now what you need to do whenever you have time, maybe you are sitting idle, instead of scrolling the Instagram, okay, so turn these last few pages and try to revise the section numbers. At least this you do whenever you are finding time. Reason being, when you write in the exam along with section numbers, the impression will be completely different. You understood? See, two ways you will be getting good marks. Number one, you are intelligent and you are having lot of knowledge on the subject. Then also you will get good marks in exam. Or you are not intelligent but you know how to do the smart work and write smartly in exam, then also you will get, because the paper evaluator don't know who you are. They don't know what is the kind of knowledge that you possess. Whatever you have written in the answer sheet only. You may be dumb also, but when you are writing the section number along with that provision and all, he will think that you are a pro in the subject and he will give marks. That's what we need. So today the world is completely about cheating only. So we have to cheat the valuer also. So that's why I'm telling you section numbers, but don't write the wrong section number and show your ignorance, please. Okay, don't do that. If you are sure that this is a section number, please quote the section numbers. Definitely the marks that you get will be different. There is a completely difference in quoting section numbers and writing the answer and without quoting section numbers and writing the answer. Okay, then. So that's why you need to remember now at present section 7 of IGST Act deals with what? Intrastate supply or interstate supply? Inter. First inter. Section 7 is inter. Section 8 is intra. And zero rated supplies, we have one concept. What are zero rated supplies? Zero rated supplies does not mean the rate of GST is zero, not that. The burden of GST will become zero. That is only known as zero rated supplies. Not the rate is zero, but the burden will become zero. Why the burden will become zero? So there are two supplies which are considered as zero rated supplies. What are they? Export of goods or services, supply of goods or services to special economic zone. These two are considered as zero rated supplies. In these two cases, so whether we can take ITC on inward supplies, yes, we can take ITC on inward supply, means if my outward supply is exported. So, or if the product or service is supplied to SEZ, then it will be called as zero rated. The moment it becomes zero rated, to make that supply, I will be having some inward supplies. Now on that inward supplies, whatever GST I paid, I can take it as input tax credit, ITC. Now on outward supply, that is on the exports or sale to SEZ, I have two options. Option number 1, so pay IGST and get refund of that IGST. For example, I am exporting. The value of this export is 10 lakhs. On that 10 lakhs, the GST will be 1,80,000. Okay, I am exporting, and what is the value of exports? 10 lakhs. On the GST will be 1,80,000. Now I have some input tax credit. What is the input tax credit that I have? Say 1 lakh. So which means how much I will pay out of my pocket? 80,000. 1,80,000 minus 1 lakh. 80,000 I will pay to government. Okay, how much I will get as refund? Is it 1,80,000 or 1 lakh? How much I will get as refund? Again, I am repeating the question. I am paying 1,80,000. I have 1 lakh as input tax credit. So net liability will be 80,000, because the net liability will be gross liability 1,80,000 minus input tax credit 1 lakh. So the net liability is 80,000. How much I will get as refund? 1,80,000 I will get as refund. The gross amount I will get as refund. What is the logic behind it? Simple. At the time of purchase, I paid 1 lakh. That also I will get as a refund. At the time of sale, I will be paying 80,000. So that also I will get as a refund. So therefore, how much refund I will be getting? Gross IGST. That is this. Pay IGST on outward supply by utilizing input tax credit and get the refund of gross IGST. So that is this option 1. In this option 1, what happened to my tax burden? It became 0. How? On outward supply, how much I paid? 80. I got it as a refund. On inward supply, how much I paid? 1 lakh. That also I got as a refund. So the burden will become 0. So that's why it is known as zero rated supply. Then second option I have. What is the second option? Don't pay any GST on outward supply and export it under bond or LUT, letter of undertaking, or under bond. By executing a bond or by executing a letter of undertaking, I will be making supplies. Okay, so outward supplies, let it be export or supply to SEZ. And will I pay any GST? No, I will not pay any GST. But on my inward supply, already I paid GST na. So ITC, in that I will get as a refund. How much in this example? 10 lakhs I am exporting. On that 1,80,000 I am not paying. I am not paying 1,80,000. But on purchases I have ITC. How much ITC I have? 1 lakh. In that 1 lakh, you see what is the ITC related to inputs and input services. That credit I will get as a refund. You got it? But in option 2, you will not get the refund with respect to capital goods. So you write there, no refund with respect to capital goods. So what is the difference between inputs and capital goods? If you have purchased some goods and capitalized in your books, you are purchasing some goods and capitalizing in your books, it is known as capital goods. You purchase some goods and you are not capitalizing in your books and charging it to P&L, then it will be called as inputs. That is the basic difference between inputs and capital goods. Input service is what? Anything that you receive as service will come under input services, okay? But we will get the refund only with respect to inputs and input services, but not with respect to capital goods. So if you have huge credit on capital goods, you need to go for which option? Option 1. Suppose if you don't have that much credit on capital goods, then it is advisable to go for option 2. Why option 2? Because in option 2, I am not going to pay anything at the time of export or outward supply. Whatever I paid at the time of purchase, I am getting. So time value of money not involved, because in case of option 1, I have to pay that amount, wait to get it as a refund. So in that example, 1,80,000 minus 1,80,000 I am paying out of my pocket and waiting to get it as refund. So there will be some time. So that time I will not get any interest. So what is the time? So from the date I make the payment, thereafter I need to make an application for refund. After making application for refund, within 60 days, if they are not granting, then only they will give me interest at the rate of 6% per annum. So therefore, what is the time frame within which if I get refund, there is no interest? 60 days. So suppose if I am getting the refund after 60 days, and 60 days should be counted from when? 60 days should be counted from when? From the date I made the payment, or from the date I make the application for refund? From the date I make application for refund. And suppose if I am not getting refund within 60 days, from the date I make application for refund, what is the interest that I will be getting? 6% per annum on expiry of 60 days, means from 61st day. So there is a time value of money involved or not in first option? Yes. That's the reason why I will go for second option. In second option, I don't have to pay that 80,000 rupees at all. Got it? So if I don't have credit on capital goods, I will definitely go for second option. If I have credit on capital goods, definitely I should go for first option, because under first option, even capital goods credit, I will get as a refund, because I will use it for my liability and I will get it as a refund. You understood or not? So that is with respect to this option 1 and option 2. Now, sir, can I decide between this option 1 and option 2 any time? Any time, within month itself, day itself. Today morning I made one export, okay, on that option 1. Today afternoon I made export number 2 on that option 2. Yes, I can choose. There is no lock-in and all here. It's not like option 1 exercise at the beginning of the financial year will be applicable throughout the financial year. We don't have this point here, which means between multiple consignments, I can choose option 1 versus option 2, okay. Then next we have this state government of Jammu and Kashmir is divided into 2 union territories now. So that is Ladakh and Jammu and Kashmir. Ladakh will be considered as union territory with state legislature or without state legislature? Without state legislature. So therefore, what is the type of GST that is involved there? SGST or UTGST? UTGST. CGST to common, everywhere it is CGST only. But I am talking about SGST or UTGST in Ladakh. UTGST. Why Ladakh UTGST? Because it's a union territory without state legislature. And what about this Jammu and Kashmir, union territory with state legislature? So what is the type of GST that we have over there? Yes, GST. And previously we had this Dadra, Nagar Haveli, Daman and Diu as 2 separate union territories. Now it got merged into a single union territory. Then there is something called as GST network. So what is this GST network? GST network will provide the services to central government, state government and various stakeholders, taxpayers on account of implementation of GST. A common point that connects everyone is this GST network. So central government, state government, taxpayers, banks, everyone will be connected in this network. And this network is not a constitutional authority, but it is a government authority. Who owns this network? 100% it is owned by government. Previously it was public-private, but now it is 100% owned by government. In that 100% owned by government, central government will own how much? 50%, and state government owns 50%. So in this GST network, this GST network is now a 100% government owned entity. 100% government owned entity, and in this 50% by CG and remaining 50% by all SGs, all state governments together, they own 50%. And what are the various functions of this GST network? So GST network, like suppose if you want to do registration or payment of tax, furnishing of return, settlement of IGST or e-way bill, all these things will be through GST network. Okay. So this may be tested as a short note question. Already this has been asked once, but again they will not be asking this and all, just for your information. So these are the basic aspects that we have with respect to GST.